What's up, everyone? Let's get ready. Strap in for the FOMC, baby. Let's go. A second. All right. So we got a minute to go. They're gonna announce one way or another. Watching the news for now. All right, let's see what's going on. One sec. Almost there, almost there. And there we go. There we go. Rates are unchanged. Little reaction, but it was already baked in, nothing major. So we're gonna see the statement now, and then the press conference is gonna be the one that's actually gonna be the big one. Okay. Give me 1 second, everyone. Shit. All right. So prior to FOMC, I was long. We were long right here. Oh, wrong chart. Wrong chart. My bad. All right, so where are we? Let's see. So when in the morning session, I was explaining why I wasn't buying right here, as some people wanted to buy, why I was interested to buy in this area, and I actually bought, but I had to close right before the news because I didn't know which way it's going to swing. So my entry was right here at 88, and I close here prior to the news right now. It's pumping right now because let me see what is being said. Yeah, market expectation, blah, blah, blah. Fed is attentive to the risks on both sides. Fed removes the reference to inflation making progress towards goal. Balance sheet runoff, blah, blah, bullshit. Hold on. Not much is happening because it was basically everything isn't changed as anticipated. So I think the we're going to be waiting for the press conference in 30 minutes. That's the one that's going to be a big one because for everything that the rates were left unchanged, so no big. Traders expect Fed to wait until June to cut rates. Okay. All right. So the Fed, so the markets are pricing in less Fed easing. Hmm. Mm-mm-mm. So basically, now we have two big, powerful entities butting heads. On one hand, we have President Trump, who wants to cut rates, and on the other hand, one second. All right. Yeah. So right now, we have two powerful entities basically butting heads. We have President Trump, who wants to cut rates because it will stimulate the economy and it's going to make him look incredibly, incredible. On the other hand, Fed says no, it's too soon to cut rates because, for obvious reasons, because the inflation is going to come back, and if inflation comes back, we're going to essentially have a stagflation, which was what United States experienced in from late 1970s to early 1980s, when Paul Walker, who was the president uh, of the Federal Reserve back then, had to kill the inflation by having almost 20% interest rates. So imagine your right now your mortgage was 5%, 7%. Now imagine now 20 a year. So that's a lot of just to combat inflation. So obviously the economy goes to absolute total shit show. So to avoid a shit show in the economy, Federal Reserve right now wants to keep the rates neutral because the economy is still doing well. So there is no point in stimulating it because it's already stimulated, so to speak, right? Uh, so so it's going to be interesting because now Trump wants to cut rates, and he already came on the wires the other day, said, "I'm smarter than Fed, so go fuck yourselves," which is and so he's not going to take any prisoners. So it's going to get very interesting what's going to happen. Right now, I think the markets are waiting for the press conference to have some clarification from the press conference itself. So I don't know how we're going to do this live thing with him talking because I will need to listen to what he is talking about. So I can just put it on. All right. Yeah. 1 second. So yeah, we'll see. I'll put it on, and we'll go from there. All right. Yeah, I just needed to check that everything is operating. Okay. So now that I see everything is working, let me. Let's do this. Boom. Boom. And let's do this. I'm gonna move my Twitter feed over here so I can see while I'm chatting with you guys what the hell is happening. Okay. There we go. All right. All right, let's do some analysis. So basically, right now, there is not much to do, to be quite honest, because you can't. He's literally going to start talking in 20 minutes, and he can say anything at this point that will throw markets one way or another. So right now is a no-go zone, for me at least. Like I said in our traders chat, I did the Nasdaq trade earlier today. We did silver trade, so I'm already in profit for the day. I don't have that pressure. Oh, I need to make some money, So I'm okay. I am waiting for. By the way, prior to the news breakout, a little retest. I thought it was going to continue, but because of the news, people just took profit and it dwindled back down. Obviously, I'm not trading this. You never trade prior to the news because a big news release is a 50-50 crapshoot, okay? And you will sometimes make a lot of money and sometimes you're just going to blow your fucking account. So as a professional, you just stay away from crazy. You know what I mean? So you work in the environments that are conducive towards trading and not just spinning the wheel and gambling, where you have an edge. And when there is news, as exciting as it is to see a huge spike, and when you're in profit, it's equally as exciting when one day you will just blow your account that way because it's gonna go the other way, and that's that. So you have to be disciplined, and you have to just wait and pick your spots when to trade, when not to trade. And I would argue that for novice traders especially, it's when not to trade is more important than what to trade, because you can go on the internet, you can find trading systems, styles, whatever. You can try them, but until you're mentally are congruent, or until you're mentally prepared to be a trader and go through that process, because in trading it's basically you against you. So it's not the system. It's you know how to use the system, when to use it, when not to use it. Use your discretion, and that takes experience. So it's best to err on the side of caution when you at least first start, instead of going gung ho and just spraying and praying and getting in trouble. All right, so let's see. Okay, so obviously this is gonna get very juicy for silver right now because this is irrelevant already. Look at this shit. So we essentially from this area right here is super juicy. You have a lot of liquidity above here, a lot of liquidity. So ideally, what I would want to see right now, first of all, it's kind of hard because of the news. We have it was making high, low, high, low, high, low, lower, meaning lower highs and lower lows as in downtrend. And then it made the new low, but it also made now a new high. So let's see how deep this pullback comes in. And if it starts going back up, that's going to be a sign for to go long. But for now, because of Powell basically said that he's not really looking forward to cutting any more interest rates, the dollar will get firm. It's dollar positive. That's why you see on all the currency pairs that are dollar based, their initial reaction is at least they're all selling off, meaning dollar is strengthening. And the reason for that is because if the rates will stay longer from initially what was anticipated by the market, that means that the price for all USD based assets has to be repriced, and this is the repricing of the assets right now. All right, based on the news that we just received. However, we just received a statement, and that's about it, which is pre-written and without a lot without context. Where with the context is going to be provided to us in 20 minutes via the interview, the Q&A portion speech by Powell, which will happen, like I said, in 20 minutes and usually lasts about an hour. So within that hour, I've seen crazy shit happen. Sometimes he says something, the market goes like this, takes out all the stop losses who are short now. Then he says something else, market goes like this, stops out everybody, and then something else, and it just and it's impossible, and it all happens like in an instant. So to avoid that whipsaw, and you either have to trade super super small size with no stop loss and just again, that's not something you should be doing as a novice traders, or it's just best to stay out, because the opportunity will present itself based on what he's gonna say. You're gonna have 2 weeks worth of trading material, trading foresight provided for you. So all you'll have to do, you'll at least know the direction. After today, you will know market direction, because markets will not reprice themselves in one swift go. So if he's going to be super, super hawkish, that will tell you immediately that the dollar will strengthen and everything against the dollar will fall, or vice versa, depending on what he says. And for the next 2 weeks, all you got, at least a week, all you have to do is just trade in that direction. All right? You pick your spots, you pick your battle, unless some new information comes in, obviously. But unless something else comes in, there's no point in. You just trade in that direction. So there's going to be tomorrow. There's going to be Friday. There's going to be all of next week. So don't just because markets are doing this shit, you're like, oh, I'm missing out. And what happens is, all the noobs just get stepped out in this whipsaw because it's unpredictable nonsense. It's basically what he says, and one sentence says one thing and it goes up, and then the other sentence negates that and it goes the other way. So it's a crapshoot, and it's stupid to you're just wasting your time trading that. It's not trading. It's just you're literally worse than casino. At least in casino they give you free drinks. You can have a drink. Here you just get fucked. So. All right. 20 minutes. Yeah, 15 minutes. By the way, nice. You can see the liquidity zones where there's support, resistance, and you can see the moving. So the orange, obviously, are areas where there are a lot of bids on. This is for NASDAQ. But usually, see all these wide space. If we scroll back to, look at this. Do you see this? Do you see how this different color right here? Because the order book is empty. No professional institutional player is doing much right now. You can see that this was earlier, right? Earlier today, you see all the activity. Then it's sort of the dwindling prior to the news, and now there's nothing going on. That's and you, the dummy, is going to be trading. If all of Wall Street, all the smart money are sitting on the sidelines and waiting, why the fuck are you going to be trading right now? But Stan, I need to trade. I need to have excitement. Well, if you need excitement, go get a blowjob from a hooker. I don't know. But this is not the sport for excitement. This is not Vegas. If the whole order book is empty, not the whole order book, but if it's 1/10 of normal volume, then you should stay the fuck out. Why? Well, because if it's all the big guys are sitting on the sidelines, you know what happens? It's a few other big guys, they manipulate the price, because the thin liquidity, with a little bit of money, they can push the price. And I'm talking about tens of millions, if hundreds of millions of dollars. And that's, which me and you are, and all the retail traders are just nothing in comparison, right? So cumulatively, the big guys, they can push the price and run for whatever liquidity there still is. And it doesn't take a big effort to do. That's why it's stupid to play for you as somebody who is unable to push the market, right, with your size. It's no point. I mean, like I said, if all the pros are staying out, most pros are staying out, you can literally see, the order book thinning out. Why the fuck are you gonna, you want excitement, go to a circus. But yeah. So 10, whatever, 12 minutes till the presser. Like I said, I'm gonna have to put it on to listen to it. I'm not sure how we. Whatever. I'll just listen it on the laptop. All right, and there's nothing to do for the next 12 minutes, 10 minutes. You just sit and watch. So this is, I'm just watching. This is tick chart, right? So I'm watching tick chart. All the trades that are happening and the volume and everything. But like I said, it's not much, and it's more of a just sit on your hands and wait until he gives you proper guidance. So there's two areas that I would trade today if I would trade today, just based on nothing. I'm talking about if I would have gone to my head what I would do. Probably I would buy a little lower on Nasdaq. Again, it all depends what he says. Two ideal spots. Let's draw some fibs. So this is up, down. 50% retracement here. Honestly, if I would just walk away right now, walk away for the day and to leave an order, I would do this. I would buy it right here. Why right here? Well, it's 618, first of all, of this leg up. Okay. And this is this line right here is a daily true range, average true range. So that's basically daily volatility. So and then you have obviously this wick candle, and a lot of stop losses are sitting right below this thing. Okay, people who are more like of a swing traders, this is where their stop losses are, here and here. So if I was to buy, I would want these stop losses to run. They hit the daily ATR, maybe a little lower with the 618, so maybe 702, like this, and then I would buy it. And that would be my trade if a gun to my head, without all the information that's about to be released. That's just strictly on technicals. Okay, but depending on what he says, a lot of shit can happen. So let's adjust this thing. And then I would target this gap close. So a dip, we buy the dip and turn around. Again, depending on what he says. Because if he's not interested in easing anytime soon, it's not going to be positive for the equities, and the markets can just keep on going down. Same thing with gold. Everything will trade against the dollar will be going up, so everything that is priced in dollar will be going down. Eight minutes. This is what was my previous gold. I was thinking to buy somewhere around here, but to be quite honest, there's no point. I am not. I took the limit order out because, again, prior to the news, no point. We get filled on NAS with this candle right here on this wick because I was basically buying this previous order block right here. Okay, so previous resistance turned support. I bought into it 618 right here, and we had the. Well, it was a very good entry. See, it went exactly to my entry pretty much and then turned around. But obviously because of news and people closing their positions, I didn't stick around either. I took half and then another half and I fucked off. So a small scalp, whatever. Money in the pocket, easy peasy. All right, let's see. So far, sellers are dominating the Nasdaq futures volume wise. Yep, we're waiting for the big man talk. So, like I said, it's going to get very interesting right now because Powell, he realizes he's literally telling Trump to go fuck himself. So, knowing Trump's personality and everything else, I think it's going to be interesting how he's going to phrase it and what he will phrase. But if he's going to be hawkish, and the dollar goes up and equities and gold and everything else goes down and other currencies, that means Powell will be in a pickle because he'll know his head is going to chopping block. And yeah, so that's why you see no orders right now, not a lot of orders compared to a few hours ago where it was the whole order book was full. Now it's just it's nothing. Because nobody wants to leave an order and just be taken for a ride. You can trade this if you want to. The volume, but again, why subject yourself to unnecessary pain? Because there's no there's zero edge that you have right now. Zero edge. There's no technical. There's nothing. You know, because whatever he says will move the market one way or another. And since you didn't play golf with Jay Powell yesterday at the country club, and he didn't tell you over the drinks after his fifth martini what exactly he's gonna say today, you sure as shit don't know what he's gonna say. Okay, so unless you're in a good old boy club, uh, you're shit out of luck. Okay. You guys should probably tune in for the presser on some other, if you have a laptop, a phone, or whatever, you'll have to just listen because I will comment at what he says when the press is as he's talking. But this is might be like 30-second delay too, so doesn't matter though. We're not trading 1 minute charts, so if I get into the trade, it will be going for a while, so don't worry. All right, Federal Reserve meeting live. It's out there in the dynamics of tariffs. We don't have. What are we going to do with a 25% tariff? Name a country, John. All right, a bunch of old farts talking nonsense right now, irrelevant. Okay, 3 minutes. Again, as much as I wanted to make this as exciting as possible, there is just nothing to do until the show starts. But so far, markets are pricing in not so accommodative Powell, and that's why they're selling off as an initial reaction, at least. Mm-mm-mm. 2 minutes, 3 minutes. Yes, you can trade mobile, obviously, on the phone or on the laptop. Uh, that would be weird if you couldn't. I'm just replying to a bunch of stuff. So yeah. Today, you might be able to get some trading opportunities, but By the time he's gonna stop talking, it's gonna be probably closer to 4 p.m. and markets will be closing, and then it's Asian session. It's fucking dead. So you're honestly better off just hanging out until tomorrow and London Open, so to speak. And during London Open, you'll have plenty of opportunity to.
That's a plus if you're at the Fed versus a minus, I think. One of the biggest economies has got to rebuild over the next several months and maybe the next several years. And in the last 60 minutes, we've hardly talked about it. California, Los Angeles. I think that's going to be a piece of this news conference through the next hour. The rebuild effort we need to see. In the southeast of this country, hurricane hit towards the end of last year. As well, yeah. Absolutely. Yeah. And in the west of this country, on the west coast in California, in Los Angeles County, that's a lot of rebuilding that needs to be done. And I'd love to hear from them today how much disruption they expect.
Okay. There will be other promotions in February. So either make it happen by the end of the month or take your chances in February. All right. 1 minute. 1 minute.
He manages to make some news. So let's see what happens when he answers some of the questions, the very good questions that we got from both Bob and Rich.
A special thanks to Richard Clouder and to Bob Michael as well. You can see the scene if you're watching this on Bloomberg TV. Any moment now, Chairman Powell is going to walk through that door. That news conference will begin in about 10 seconds' time. Can we give some
10 seconds.
prices look like this on the S&P 500 near session lows? We're down by 0.9%. Bond yields creeping higher across the curve on a 2-year, 10-year, and 30-year. Just a little bit more hawkish than we expected, Lisa, in that statement.
At a time when they had at one point been concerned about a labor market that was supposedly weakening, now evidently it is solid. That is not the concern. Inflation on the move is still the preeminent concern. How does he dovetail that in terms of what could tie the difference between possibly a cut or a hike?
In the first news conference of 2025, here's the chairman of the Federal Reserve.
All right, let's go. It's on.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled
I'm gonna
from
paste
their
the link.
formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose.
Interesting. So basically, on a stronger economy, the markets are catching a bit on his first initial comments.
Broad range of surveys of households, businesses, and forecasters, as from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance.
Boom.
At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context.
We're gonna wait for this hourly candle to close before we're gonna enter into something.
As well as
By that time, he's gonna start probably. Well, it's not gonna finish yapping, but still listening.
our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review.
I need some coffee.
The Fed has been assigned 2
These
goals
things are
for
always
monetary
boring.
policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Yeah, sure.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, let's hear. Q&A starts.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or from to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
3 questions.
Yeah, right.
Seeing it
The
really
first
as one
question,
though.
Ace.
So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The
Smart.
public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated this demand to you?
I've had no contact. Thanks.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then,
Hilarious.
how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
Everybody wants to keep their job.
Really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening.
Obviously, I'm watching NASDAQ, and I'm watching when buyers will step in. So far, we see only sellers providing some resistance. Somebody got popped right now. But this is still looking like shit. So looks like a bloodbath. So I would leave it alone.
So we literally look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive. And for that reason, we're going to be focusing on seeing real progress on inflation or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward our 2% inflation goal. At the same time, we don't need to see further weakening in the labor market.
This would be the ideal setup
That's kind of what we've been
around, but without we're gonna get a deep pullback like that.
has been broadly stable now for 6 months. Conditions seem to be broadly in balance.
And until the press conference ends, I'm not gonna be entering this Chop Fest 3000.
Readings are two bad readings, but nonetheless, the last couple of readings have suggested, more positive readings. So I think policy is well positioned.
Colby from the New York Times. Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No, so let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December.
Oh boy, boring.
Two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret.
Which is good.
Two bad readings, but
Trading
this is
should be
not meant
boring.
to send a signal. Other than this, you can.
Because whenever it's not boring, that's when you get in trouble.
Committed to achieving our 2% inflation goal sustainably.
And just to follow
Crypto
up,
ripping.
we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the long run, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in?
See, this is why you're not trading right now. So look what happened. This is why it's stupid. So in the last, this is pretty much all of today's trading range, right? This is today's trading range. So what happened? We were trading. This is gold trading range all of today since 9:30, since whatever 10 o'clock, right? We're trading in this range. Then this thing starts running. People want to get short. They think, and then bam, they get stopped out. Okay, same thing here. People who were long, they got stopped out right here. So basically, all that happened was market makers made money by stopping out people, and everything else is irrelevant. That's why you stay out. This is a perfect example why you stay out. Perfect. So just liquidity grab one, liquidity grab two, and immediately no follow through.
Meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policy is affected at the margin. But we're going to wait and see.
If I can follow up the idea that you feel the economy that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you?
Sorry, guys. I wish it would be a little more exciting, but it is what it is.
We're looking. It's more the other. The way it works is we are looking at the data to guide us in what we should do, and
Yeah, exactly.
right now we feel like
It's just whipping about. It's literally just whipping everybody about, and taking everybody for a ride. Everybody, and that's why it's a lot cheaper to be on the sidelines, okay? Especially during times where you have zero statistical edge, and you're just going to be coin flipping your trades, essentially. Because, again, people who were long from here and they rode this wave, they just got stopped out. Their stop losses were where? Below this point, below this swing, below the swing, previous swing, right? Same thing here now. These people got stopped. These people got stopped out. These people got stopped out. And then it reverses and stops out these people who are short. This is where their stop losses were. People who sold right here, thinking that it's gonna keep on running lower. This is their stop losses, and all that happened was their stop losses just got stopped. Okay, and that's why you saw this pop and immediate drop into back down. So we're essentially just again taking advantage of dumb people. That's all it is, with no follow through. And guess what? Some idiots bought here, and they might just be surprised when we go down once again. So that's why you stay out until the news press conference is over, until you know that there's now no more surprising monkey wrenches that can be thrown. It can keep going up, but it just as easily can go like that. So when you don't know, and nobody does, no point in
stipulations about maintaining an office of minority and women's inclusion.
So I did mention consistent with applicable law, right?
Which is government.
Elizabeth,
welcome.
thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
As I've said countless times over the years, this is who we are. This is what we do.
There's a lot of bullshit questions too. So he goes on for an hour, yapping about nonsense. But basically, what you want to, the reason why you have to wait for the press conference to end is because once the press conference ends, the price was doing this shit. It's gonna finally, at the end of the conference, it's gonna pick a direction. It's gonna go like this, or it's gonna go like that. Okay, what do? You don't obviously you don't chase like a dickhead. Even though you see it running, and you might make money if you chase. Chasing does not work long term in trading. Okay, so don't chase. What you're gonna do instead is at certain point, people who are, if let's say we're gonna go up in whatever asset class, let's say stocks, if we're gonna keep going up, what you're gonna do is you're gonna wait for profit taking to ensue. So people will close their positions prior to market close and Asian session. So you're gonna have a dip into some interesting area, and you want to buy the dip. Essentially, that's what you want to do in late Asia, early London, shit like that, and wait for this dip. Dip will come. It always comes. Okay, nothing moves in straight line. Nothing. So there's always a dip. There's always a dip. There's always a dip. There's always a dip. Okay, always. So your job is to just wait until it happens, because you're gonna know you're gonna at least have a higher probability of knowing the direction. Once you know the direction, whether it's up or down, then just pick tactically pick a good spot using tactical analysis or whatever, coffee reading, coffee. I don't know, whatever, moon cycles, whatever you guys do to trade. You obviously have to wait for that to set up, and if markets will give you opportunities. Like I said, though, there's always ebbs and flows, ebbs and flows.
Pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, this, we're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And
I think market is going to go down right now a little bit. You see divergence right here? Price is, this is lower than this peak. This is a momentum divergence. So I think we are about to roll over which makes sense because we took out these stop losses. Boom, exactly. There you go. Immediate. Like reading the motherfucking future. Again, this is very super short term, so it's on 1 minute chart. Yeah, you can make trading decisions and catch a few points. On high leverage, people make money that way. Let's wait and see. But again, it's still very dependent on what he's talking about. So.
You said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that show.
The floodgates will open if we take out this low right here. If we take out this low, this could be a nice trade. You sell right here. If we retest.
We look at, of course, a very broad range. And so it starts with
1 minute chart trading, obviously.
the unemployment rate, employment participation, wages, job quits, are people quitting.
But buyers are stepping in. That's good. On the higher time frames, it's looking more bullish than bearish to me.
It's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down. And that's
But the internals are not confirming this. So
let's say that the unemployment, that the
risky.
labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But yeah, I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
And then again, look at the market structure, right? So we took out the low and we took out the high. So we took out the low, we took out the high. What it needs to do is now reveal its hand. So it either needs to do this and put in a higher low and change this and take out this high, and thus making it higher high and higher low, meaning that we have a market shift in structure and back into the uptrend on a 5 minute chart. All right, that way Once we take out this high right here with a low put in, we can see that this was a high, a higher low, and then a and then a dick. Sorry, I couldn't. This press conference is very boring. But yeah, this is where you should my special technical analysis. Anyway, wait for some kind of short-term dip, and then continuation. It will come. Trust me. Just be patient.
We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
You know, we run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. And I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not gonna react or discuss anything that any elected.
And by the way, this is complete charade bullshit. This is not capitalism right now. What we have right now is central planning, and it's a complete shit show of mockery of capitalism. It's not capitalism. It's literally central planning. Hence, for Federal Reserve being called a central bank. Okay, so against which most knowledgeable government, founding fathers were against. Okay, but.
And really the reason is that the work that the NGFS does has broadened very significantly. You think about nature-related
Oh boy!
risks,
All right.
biodiversity, and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times. And I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that. The process, this process dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really.
Oh boy.
It was driven by kind of the disconnect between the work of the NGF.
Again, see, this is why you don't want to buy these breaks when internals are showing you that this is horse shit. All right. Not yet, at least.
Thanks, Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Oh my. Oh,
Well,
kill me.
2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to
See?
ask is just how far away you think.
All these people right here are now sweating bullets
Yeah.
because they rushed.
Precision, of course, as I like to say, that you know that.
So why put yourself into these positions?
So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer.
Oh boy.
I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting.
This is a minimum retracement, the 38.2. This is decent enough if we keep on running. But again, wait for the press conference to end.
Everyone knows precisely how much that is, but not knowing that and having
Politico. So, as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed? Sometimes, never, or do you just often voluntarily comply? What is
I
the
was looking at the cumulative volume delta. Okay, so it's still. This is S&P 500. Let me go to NQ, the Nasdaq. When is going to be a legitimately bullish move, and there's going to be juice behind it? This thing is going to be all green, and you know that it's for real. Right now, it's not yet, at least.
Notably in 2019 last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is a big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry,
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you were actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but you can also hear consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the trade, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There's a lot more manufacturing moved to Mexico and other places. So there are differences, and I just think the range of possibilities
It's
is
fucking
very, very
boring
wide.
as fuck.
We just don't know, and I don't want to start speculating, as tempting as it is.
Come on, shut the fuck up already. Let the markets do its work.
And we didn't know, by the way, in 2000 and I guess 18. We didn't really know, and again, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much. What countries? We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that
Went
price
to
increase from the tariff can show
a doctor
up
earlier.
between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors.
See, there's no juice behind this yet. It's anemic. All right, jerking off. Because you will see the difference. Well, let's just wait and see. You'll see the difference, how this picture looks internally completely different when it's for real, when this movie is going to be lit up.
And then the second question is just, I wonder if the AI prompted sell-off in the stock
And if the longer we dwell in this
the state of financial condition.
market where we're just simply gonna run out of buyers, and since it's dominated by sellers, once the buyers throw in a towel, this is can very easily roll over. So you want to see that the buyers are there, heavy buying orders and volume coming in.
Tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserve regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support the smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On on AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although of course we're all watching it with interest.
Simon.
Simon Levinovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point, back above 7%. I'm wondering, going forward, do you think, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
Still listening.
So, as you know, as we've reduced our policy,
God give me patience.
Longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more.
Honestly, this is he can yap. He's going to be yapping for another 20 minutes or so. Very possibly can. And all we need to see is what the markets will do after he stops talking. And then tomorrow, if there is a follow through, once we see there is confirmation, we just use that as some kind of short term pullback as an entry point to go into the direction of what market is dictating us is the fucking direction. Okay? That's it.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize.
All right. Well, he's escaping. He's basically
just not our job. I do think
trying not to offend Trump. So anyway, there'll be a deal done behind closed doors.
Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I believe that did matter in 2018, 19, and it's one of many things we'll be watching.
Okay. It's getting more interesting.
Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
Guys, if you want to learn how to trade of the order flow and everything else, there's a lot of, don't buy anything, trust me. Do, at least not in the beginning. Listen to a bunch, go through the YouTube first. You'll get the basics. Once you get the basics, you will find few teachers that are worth the fuck. They're probably with some not big entity, but with their they're not gonna be 18 years old. Okay, give you a hint. Uh, and best type of learning experiences if you can find a mentor. Okay, I used to do these things for people, but I simply don't have time anymore. But there's plenty of resources available for free.
rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions.
Again, you don't need to have the order flow to make money. You can understand what's happening behind how the candle is moving at what area the candle is moving. You know what I mean? So you also have to understand how market makers think. If you, the rule of thumb is very simple. Ask every time you enter a trade, ask yourself this question: How would you fuck the most? Uh, how would you fuck the most amount of people out of their money? Okay, and that's how. That's where the market is gonna go. Okay, it's gonna go to that level. So, like I was explaining today when the whipsaw, why I know the whipsaw. Well, first of all, I've seen this shit happen too many times, but another criteria is you have to think like a market maker, and once you realize where the stop losses are, and you actually wait and for the stop loss run, that's when you should be entering, like a market maker, not before. Let the stop losses happen, and then you buy or then you sell. All right, because they clear the books, and then the market turns around to go to another direction usually. But yeah, always ask yourself question: What's the most amount of pain one can inflict at what areas? If you would have $1 trillion, what would you do in this market structure? That will help you a lot. And another big one is if you are losing right now, if you're losing money, what you do is, let's say you want to, I already gave that hint yesterday, put your entry where your stop loss is. So instead of, let's say the price, instead of buying it right here, buy it at your stop loss or below your stop loss. Because usually this is too early. The stop loss runs. How many times did the price, run the stop loss and then took off on you? So start putting your entries where your stop losses are, and you will do a lot better. Do you know why? Again, because of the market makers. How many stop losses were below this point? Okay, a lot. Boom, dip below this. Since we're moving higher highs, higher lows. This is oops. This is simply previous previous swing low. So obviously there's a big zone of liquidity here. Big accumulation of stop orders, short-term stop orders are sitting right here. Not retail, not yours and mine, not Joe Blow the plumber. Institutional too, So that's why it's a game between big dogs, okay, and these people got stepped out, liquidated, and now the price is taking off because they were buying here, 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 or especially right here when they took out this. Especially once we took out this huge level, right? This level right here, right? We took it out with this wick. We popped its at our heads. People who were buying, put their stop losses right here below this level. So you figure out how would you fuck the people who just bought this breakout with the fake out, right? You would run their stops. Where are the stop losses? Where would you put the stop loss? Right here. So the 90% of fucking morons. So they did put the stop loss right there, and now turn around on them. And again, it's all very rhetoric dependent right now because he's talking. So that's why you should be not be trading. Period. But we're not making any trending. This is whipsaw. Look, low, high, low, higher, high, lower, low. Again, back up. Look at this price action. It's this is just whipsaw central. A whole lot of nothing. It's directionless. So wait until he stops yapping, and once you see trend happening, you will see some profit taking. Okay, some profit taking will happen. That's when you're gonna enter at this area. When you start seeing turnaround, you enter, and it's gonna do another leg up. Okay, put your stop loss below here, and run your 2 to 1, 1 to 1, 1 to 3, whatever floats your boat. And that's what you're gonna find out after the press conference, especially tomorrow. All right, I'm still listening to this bullshit.
It's going to have to be something that isn't just idiosyncratic. We're going to want to see, continued progress with.
I woke up very early today. I'm super tired.
Inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? We expect to see that. It's just a question of when.
Joe Pascal, Horsley for NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think
that's going to be a big level right here. There's a lot of liquidity sitting above this. What is this? 50. Let's take a look at the NQ.
You're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it. If I'm being at all unclear, we're not going to change the inflation goal.
So above this, the next big order block is right here, 21,550, which is this high right here. That's where all the stop losses are. So you see there's nothing underneath. So if you want to sweep this for stop losses, this is where you're going to want to go. You want to go here and pop them.
We wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the star variables, especially U-star, the natural rate of unemployment. So that was an insight.
Oh boy, I think he's gonna end in about 15 minutes. So it's a lot of yapping, a lot of sitting on your hands and watching this bullshit. Unfortunately.
At times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2%. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the.
We're retesting this previous area of resistance turn support.
To the point where the data turned against that, and when the data turned against that in late 21.
If we turn around right here and take out these highs after he stops talking, you can trade that momentum upwards till the end of the day. You can.
Than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Last question. Come on, baby.
Fellow Chairman Powell, Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you
talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this
Wow.
unregulated asset class could hurt their financial well-being, or do you think it has a place in how?
That's a lot, big fucking level right there.
Our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's.
But the sellers is still dominating big time, so.
Serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As many of our, a good number of our banks that we regulate and supervise do that. You know, the threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new. And you know, we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, you know, we're not against innovation, and we certainly don't want to take actions that would cause banks to, you know, to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So. You know, that's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements.
Come on, shut the fuck up already, Jesus.
You know, the securities laws that we have. It's why, you know, if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And you know, I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, you know, with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do.
Okay.
Thank you.
All right.
These always go on, maybe one or two questions too long, don't they? That wraps up the first news conference with Chairman Powell.
Okay, so.
A two-part story here. One part the statement, the second part the news conference. The statement pushed stocks down and bond yields a little bit higher. In the news conference, equities came off the lows and bond yields came off the highs.
Let's see.
The Federal Reserve repeated that inflation remains somewhat elevated, but removed this reference to this line of it having made any progress.
Okay. All right. So this is the game plan. Thank you for the ones that stuck around. You can also see dedication of other people, the ones that left during this boring ass press conference. This is, you know, it's not all fun and games and shooting and blowing shit up and blah blah blah. Sometimes it's just work. Like it is right now. Okay, so this was a previous area of resistance, right? Turn support. We retested it, and this is the like I said, this is a magnet. This big fucking level at 50 right here, and nothing underneath. So what would you do if you were if you need to fuck most people out of their money? You would pop this fucking level right here. Okay. Sorry for the cursing, but it is what it is. So let's see if I'm right. But for now, we are just let the price develop a little bit. Don't chase anything. Because basically what he said was not positive for the for Nasdaq or gold. Okay, but yet, and the sellers are still very much in present in the equation. But oh, look at that! Look at that! They're fighting for the level. About to. Yep. There you go. Like a fucking magnet. See? This is exactly. This is. I mean, 5 minutes ago, I told you that they want this level because, again, I'm no genius. It's literally, how do you take advantage of where are the liquidity pockets, and this is where the price gets attracted to. Okay. This is where the price gets driven to because you want to absorb these orders, and it's basically people who are short, You know, they were short right here, and now they get popped. So the next level is this here. See, again, it's forming. You don't need this. You can see that this is the high, and these orders sitting right here are I know that the orders are there. I don't need this to tell me that the orders are there. I know that the orders are there, but I've been doing it for a long time. So if you want to trade, if you want to trade with a little help, that's why futures offer a little bit more clarity for people. But you don't need it. I learned to trade without it, and maybe I'm better off for it because, like I said, I don't need to rely on level 2 data for me to see the order books in order for me to trade. So is it necessary? Not really. But does it help? Sure. Looks nice. All right. All right. I think we're gonna run. We're gonna have a bullish close, I think. Okay. Like I said, there is no rush to get into anything. But this is looking this is looking bullish right now. Why? Well, so you have obviously higher lows. You have this gap to close on NASDAQ. And whatever Powell said, the markets, again, it's Powell says one thing, another thing. What you think, what I think is completely irrelevant. You have to see what the price thinks, okay? What the price is telling you. And you trade what you see and not what you think, okay? What you think, what you have up there is dog shit. And that dog shit is the result of you taking losses all the time, okay? This is why you're unprofitable, because you're thinking you're smarter than this. So instead of thinking just blindly, not blindly, but let the price tell you what the fuck it's thinking, what it's doing, and just do that, okay? It's as simple as that. As much as markets would make sense for markets to go down right now, if the opposite picture is happening, then this is what you have to go with, okay? So can you buy now and put your stop losses here? Sure. And trade it till, for 30 minutes. But there's a sea of orders. By the way, look how book returned. Look how the orders are piling on. So activity, the volume is picking up. All right, there you go. See? Now we're cooking. Good looking. All right. Oh, shit. This is fucking around, so don't. Personally, I would wait till tomorrow, okay? But you can see how the book, the order book is getting populated by orders right now, okay? With aggressive buyers and sellers. But this is still looking, anyway. What the fuck? Oh, this was lagging. All right. Let's see the internals. So this is where he stopped talking. Everything is ready. On the 5-minute chart, it's looking okay. All right, let's pop these orders here at 2600 right now. Even number, big number. All right, 21 even. Shit. Might very much do this first. Go here, retest, and then bounce. Or go deeper and bounce. But momentum is up. So Where's the 600? There we go. Let's pop the top, baby. All right. We cooking in here, baby. Let's go. All right. So I'm gonna leave this running. Let's see, and I will target the gap. There we go. Yep. We'll see. All right. So that was it. Like I said, if you want to be short though, since it's the end of the day, wait for price action to develop a little more. If you see that we took out these highs here on Nasdaq, all right, there's definitely it highly likely we're going to close this gap, highly likely, okay, and probably go to this trend line right here. It might happen in London tomorrow. It doesn't have to happen today. But if I were you, and you want a long, at the bare minimum you should do is this. You should go on the 1 hour chart, wait for this candle to close. And if it closes bullish and strong with this wick right here, looks pretty bullish. Obviously stop loss below here, and whatever, enter. You will have enough space to this distance to at least do 1-to-1 trade. Okay. So on that positive note, like I said, wait for this candle to close, and then you will you'll see you'll know what to do. Okay. So right now we're still in gold. We're still also within this range. Let it break out. Let it start trending. Once it starts trending, there's going to be a dip. You buy the dip for another leg up. And if it does the same but to the downside, that's why I don't give a shit what happens to gold. Right now, all I see is just consolidation, all right? And previous swing providing resistance. So let it consolidate. Once you see a breakout, there will be a retest of the breakout. And once it starts turning around, you buy it right here. That's it. That's the gold trade. This is the Nasdaq trade. Same thing. Wait for this candle to close. Again, not every single time the trades will work out. There's no 100% system. Nobody makes money 100% of the time on every trade, and you should be okay with it. Sometimes good setups set up, and they might not work out. So be it. So on to the next trade. But then after 100 of these trades, 70% of them do make money, and that's why you're profitable, even 1-to-1. A little profit. All right. No problem. My pleasure, Jennifer. Shakir, it's because of regulations, because it's a U.S. entity. Futures are traded, and there's obviously, due to the history between the countries, that's why it's not supported. Unfortunately. By the way, another option is obviously you just wait for today's to close, because this candle is going to close at 4 p.m. At 5 p.m. markets will close. So it might be even better to wait for 6 p.m. when they reopen. You see what Asia starts doing. again, Asia is not going to have a lot of volume in it. So you'll see if its market stays above these levels or slowly drifts up, it will it will allow you plenty of entry opportunities. Okay, so don't rush it. I might just close this as a scalp prior to 4 or 5 p.m. too. So it doesn't matter. If it doesn't keep, if it stays anemic and there is no action, I'm not gonna stick around because it's cheaper for me to just close this trade and go enjoy my evening rather than have this because as you can see, buyers are trying, but nothing is happening as of yet. So. But the signs of buyers coming in is good with these wicks. So again, you don't need to always look at the internals, the candlestick patterns, and the levels at which they do certain things give you clues as to what's happening. So like I said, we have higher highs, higher lows, higher highs, higher lows. Okay. So especially if after this we put in after the presser, we put in another high, that's a definite. Whenever you're gonna have a dip, that's good. That's a good dip to buy because it's gonna highly likely it's gonna do a higher low for another leg up. Okay. All right, boys and girls. I'll see you tomorrow at 9 a.m. New York time. Hopefully this was useful. If you do like, subscribe to YouTube channel, Twitter, go check us out on Discord, buy an account if you want to trade with us. If not, then this is still, you can hang with us on these lives. Okay. All right, be careful. Again, be careful. Don't rush things. Wait for this candle to close. It'll give you proper direction instead of rushing things. And once you see the candle close, it will give you a much more confirmed picture of what's happening, and that's when you can enter your trades, more conservative trades. Okay. All right, ladies and gentlemen, I wish you all a lovely evening, and I'll see you all tomorrow at 9 a.m. Cheers.